Welcome to Partnerships for Profit, the podcast where we bring you inside the world of joint ventures, strategic partnerships, and powerful collaborations. Whether you're looking to expand your network, find new referral partners, or scale your business, you're in the right place. Let's get started.
Episode of Partnerships for Profit, I'm sitting down with a power couple who are rewriting the rules on tax planning for entrepreneurs. Jackie and Adam Williams are the founders of Pennywise Tax Strategies, and they're here to tell you that your accountant might be costing you more than the IRS. Jackie's a CPA with Big Four and Fortune 500 credentials. Adam's a business attorney and direct response entrepreneur. Together, they've helped businesses owners legally cut their tax bills, build real wealth, and take back control of their cash. So if you think writing checks to the IRS is just normal, stop it. Let's get into this, though. Hello.
Writing checks to the IRS is normal, but it's unacceptable.
That's better. That's probably fair.
Yeah. It's been normalized, but we're here to fix that.
I don't know. See, I saw on TikTok where you really don't have to.
Oh, yeah. I saw that too.
Want to write checks to the IRS when we legally owe taxes. And there's no promise that we're going to completely eliminate, but we like those checks to be as small as possible.
Yes.
That's fair. That's fair. Let's start there. So if I remember correctly, this whole thing started because of one of the large bills that came out, correct?
Yeah. So that Jackie joined my law firm back in 2019. She left her big fancy corporate job and all the job security and health insurance. And if you look at our revenue and profit through the 15 years I've been in business, there's this inflection point in 2019 where it completely takes off. And the cause and effect there is that's when Jackie joined the business. So, we started growing, we made, fast growing law firm lists. We made the Inc. 5000 list. And it seemed like every single year we were having the same conversation with our tax preparer, which was, you made a bunch of money. Congratulations. Here's the check to send to the IRS. And that's like, stepping in the ring with Mike Tyson. You get punched in the face a certain number of times until you finally say, you know what? I should probably try something different here. So Jackie and she went out and got some certifications. We both dove into the tax code, started learning more about these strategies. And in the very first year that we started doing some of this stuff for ourselves, we saved our family about $250,000.
Wow.
Right. So there's something here. So continued looking into it. Jackie continued to study. And now we decided, you know what, the real opportunity here is, I bet there's a whole bunch of other entrepreneurs out there who are just like us that say, something doesn't seem right about this relationship I have with my tax preparer and with the IRS. It's a pretty abusive relationship. So there's got to be a better way. And that's how and why we launched this thing.
Yeah. So let's get into that bobbing and weaving. What did you guys learn in the bobbing and weaving?
Well, Jackie likes karate kicks. But...
Oh, okay. I mean, hey, we all got our style. You said you were boxing, but if you want to take them out.
No, that was a whole inside joke that nobody's going to understand. But, we've been talking about that a lot today.
Yeah. So, I think when Adam said that I joined the firm and we took off. Well, actually, we also joined a lot of mentoring programs. We learned a lot more about being responsible business owners and what we needed to do to scale our business and what we needed to change about the work that we were doing and the way that we handled things so that we would have more success in a profitable perspective, right? I think so much of that also applies to knowing what your tax bill is going to be at the end of the year and how you can take ownership over what you already are doing, how you do it in the most tax efficient way, I guess. And as well as like other things you were thinking of doing, maybe timing them in the right periods so that you can take advantage of the tax effects in the years that are going to benefit you the most. So that's really, it's identifying where those opportunities are and then making sure you go and implement it. Is really what we want to make sure that we're getting out there to business owners and, how they can take control of it.
Yeah, I mean, obviously, you're making those strategic purchases and those things. And if you're doing them at the off time, you're going to be causing a lot more issues than they're worth.
Yeah. And you're also like, if you're not timing them right, you might not be causing issues, but you also aren't getting the benefit maybe.
Yeah.
Yeah.
So when you guys first started doing it for you guys, what was the biggest thing that you switched that caused like the first like, holy, yeah, we need to get into this a little more?
I've got my answer.
So, I think when it comes down to it, it's knowing your numbers, right, Adam? That's like our biggest thing is you got to know your numbers. If you aren't, you're not getting a bookkeeper seriously, if you're not sitting down and looking at where you are, you don't even know what your taxes are going to be and if you should save or if you should make that next move.
Yeah.
What would you say, Adam?
Am I allowed to swear on this podcast? Okay. So the question is, what was your holy shit moment?
Yeah.
You realized like there's something here. And I was having a brainstorming session and Jackie was there. And
okay. My assumption.
I don't know if you can see all of the images behind me, but there's a Porsche 911 right there. That's a Porsche 356. That's the Martini livery that you see on race cars. And the conversation came down to, that Uncle Sam could help you pay for your race car. There is a tax advantageous way to take the thing that you enjoy doing now and have Uncle Sam help pay for it. So we started walking through like, well, what would that look like? And how would that work? And that was a holy shit moment for me that a few months later, I bought a Porsche 911 that has that Martini livery on it that I take out to racetracks. And it is a business venture that creates a whole lot of tax advantages for me. So yes, Jackie's answer is the 100% correct, mature, sophisticated business owner answer. And everybody to get to the next level of success has to grow and mature and learn like that. But you can also be a child like me and say, wait, I can buy toys and have Uncle Sam help me with this. So if that doesn't tell you everything you need to know about Adam Williams and Jackie Williams,
yeah,
you know what will.
I just got the relationship. So it's okay to have something that pushes you, but make sure you get a Jackie is what we're trying to, right?
I think that's fair. Yeah.
Okay.
Nobody would disagree with that.
So Jackie, how did you help him with his childhood dream?
Well, so I mean, honestly, like that's where we like to start with our clients. So when we talk to entrepreneurs, we want to find out like, okay, what are the things that you expect to do for your business and how can we find ways to save on your taxes there? But also, what are the things that you are hoping to get out of life and how can we get there sooner? And, how do we make sure we stay within the tax code to make that something that makes sense? Yeah. So when we're talking about something like the race car, it's like, okay, well, for those of you out there watching that, know the tax code really, really well, or just a little bit, that you can't write off a hobby, right? But you can write off, losses related to a business. So when it comes to things that you want to maybe have the benefit of having the experience of like, living your hobby, how do we make it into a business, right? And businesses need to be run for purposes of a profit, right? So it's things like that. So I don't need to get into the details, but it's when we can identify, how does this make sense from a business perspective? Then a lot more opens up to us because the tax code is written, for small business owners, right? To take advantage of. So I guess that's kind of just an example of how we make that work.
Yeah, we find the why that wants to help you drive this instead of just being like, yeah, we're going to save some money.
Yeah.
Because until later.
Because it'll save you. It's let's invest it in something that you already have a passion to invest in. And how can we get there and make it work?
Love that. Love that. What's a story for one of you guys clients that you've been working with that here's one of the ones that just blew them out of the water after we finish up this?
So, I mean, a lot of people are purchasing, short-term rentals, right? Mm-hmm. And getting the benefits from a cost segregation study, but then also getting the opportunity to have like a little getaway and use that time there as well. So I think that's, it's maybe a pretty generic one, but it is one that we see a lot because it kind of gives you the answer to like, hey, I want to have a second home. I want to have another opportunity. How do I make it work from a business perspective and get both?
So I think that's a really good answer, Jackie, because like where we start with our clients is what do you want, right?
Yeah.
And if we get clear on the goals, you write the business plan, the hiring plan, the marketing plan, the financial plan or budget. And yes, the tax plan should be a part of that because it can help you get there even more quickly. So the short-term rental is a great example. You want to have a vacation home? Great, let's do this in a tax advantageous way. And it turns out that that's one example where there's massive tax benefits available. So again, you've got her perspective on this. This is a great way to fulfill your dreams and build wealth and save on taxes. let's
Go
talk
on.
toys. My favorite clients are the ones that want to buy airplanes or upgrade the airplanes that they have, right? You can't just go out and do this and magically save money on your taxes. You have to do it the right way. But we love being involved in those conversations of, hey, if I upgrade the jet, what does that look like on my taxes? That's not all of our clients, nor does everybody want to. We talked to a guy a week ago that makes millions of dollars. He's like, I don't want to own a jet. I don't travel that much. Fine, then we're not going to do that. I don't own a jet, but I own a single propeller airplane that costs significantly less money. But that's part of the lifestyle that we wanted to have, is we want to be able to travel places and go on adventures and do cool stuff. So let's do it in a tax advantageous way.
So in that mind frame, because I feel like you were probably 80% of this is first starting to shift their mind frame around how they're looking at this. What do you usually hit the wall with people? Because obviously taxes have never been something where someone looks at and go, oh, let's make some money. That's just not, you know.
Yeah. I mean, in working with clients, and maybe the first few meetings, it's really making sure that they're committed to being proactive versus reactive. I think the industry around taxes is reactive primarily. So, everyone's like, oh, it's April and now I owe this much, or, I'm going to do an extension, then I'll figure out in October how much I owe. And I think it's really like getting them excited about the plan, but then also, hey, we gotta make some moves before the end of the year. We got to make sure that we're stepping on the scale on a regular basis to see if we still need all these strategies, and really acting in a, working with the tax advisor, working with the client on a monthly basis is very key to the success here. And I also think that the tax accounting industry is not also set up that way. They're still working on people's tax returns in October, for the prior year, and they just want to get it done. So I think it's retraining the client, the business owner that way, but it's also, we have to find accountants that are also thinking proactively and not reactively when we build out our team.
It really, for us, starts with education. So when I started my career, it was also at the same Big Four accounting firm that Jackie was at. And I worked in their tax department. And we worked with these big, massive corporations year round to save them tens of millions of dollars on their taxes. And it wasn't until several years later that we both realized, gosh, that stuff that these big corporations are doing to manage their tax bill and save a whole bunch of money, that's actually stuff that's available to entrepreneurs and small business owners, because the tax code is written with all of that in there.
Yeah.
So let's get out and educate people and show them what the possibilities are. And the tax code can be a tool that you can use, because honestly, that's how the government writes it. They write the tax code to raise revenue and to incentivize you or disincentivize you to do certain things. So let's go see which ones of those things you want to do.
So I would say it's probably just a lack of understanding where most people lose tons of money on this.
100%. Because listen, I went to college for 7.5 years. No one ever taught me how to run a business. No one taught me how to do marketing or sales or make things profitable, right? Well, they sure as heck didn't teach me how to do my taxes.
Yeah.
But the joke on the internet is like, but ask me about the Pythagorean theorem and I can knock that thing out for you, right? So that's the whole point, is like Jackie studied accounting, but was there a class on small business proactive accounting? No.
Yeah.
But years later, we realized, oh, it's there. We just got to go and figure this out for our clients and use resources that are available and educate them. So that when we give presentations, we talk about the different types of accountants that there are. And when we explain that there's a difference between a bookkeeper and a payroll company and a tax preparer and someone who's preparing your financial reports and a tax strategist, people go, actually their phones come out and they take a picture of that slide and they say, wow, like just that moment is a turning point for them when they realize there's more than one type of accountant that I can use in my business.
And it becomes a tool too to talk to your accountant. Like, which of these things do you actually do for me? Because I can't tell you how many people come and work with us and they're like, yeah, I don't know if anybody's doing that thing. You're supposed to do that thing. I thought my accountant did all these things.
So give me, as a business owner, the first 3 things you could do to at least take handle of it. Obviously the detail that you guys go into, there's detail work. You guys got to get a hold of everything and work with them. But the overall 3 things that, And I know I'm going to get an Adam version, but give me Jackie version. Then
I can tell you what Jackie's going to say, but let's hear it.
You can give me both.
Yeah, there will be some overlap. Don't worry.
Okay. Well, do you want to give our? Do you want to each do one and see if we get the same 3?
It's like the newlywed. I'm going to write him down on a card.
I'm like, put it in the comments.
Announce your answers. No, go for it.
Flip it. Right.
Okay. So I would say the first thing is entity structure if you're a small business, because that's where all the rest of the strategies are going to stem from.
Okay.
And that's typically the first thing we say in any of our presentations. That's the first thing we look at. If I'm reviewing to meet with you for the first time, I'm going to look and see how your entity is structured. And there isn't one size fits all for everybody. And that's why it's so important to evaluate not just once and get it set up, right? But where are you now versus where you were could determine whether or not you should still be in that same entity. And where you want to go too is a really big reason to change your entity structure.
Yeah,
so that is probably the biggest thing, the first thing that we look at. Second thing.
You want to give me your first?
There you go.
Oh, you want mine first? Okay. So I started working with a personal trainer 5 years ago, right? And the way that they get you in is they say, come in for a free half-hour workout. And in 30 minutes, by the end of it, you're sweating, you're puking in the garbage can, you're worried you're not going to be able to walk. And that's this moment where you go, okay, I'm ready, right? Because at the end they say, by the way, most of our workouts are 60 minutes and this was only 30. So I like to give people that sort of trial by fire. Start by pulling out your tax return and look at what your tax bill actually is. You'll be puking in the garbage can.
Yeah.
We're used to, oh, maybe what I pay is estimates, or maybe what I pay on April 15th or October 15th, or maybe what I got as a refund, but we don't actually know as business owners how much our tax bill was. So pull out your 1040, go to page 2. Is it line 24? I think it's line 24. It says total tax. And that will tell you the size of the check that you wrote to the federal government. And then you got state and local on top of that. And if you look at that number and you go, cool, you don't need us. But if you look at that number and go, mother, that's where we get the phone calls. So step on the scale and get some knowledge there initially.
I like that.
Yes, entity structure is great too.
Well, I mean, yeah, that's the next thing you do after you say the F word, I guess.
Yeah.
Yeah.
Go ahead, give me number 2, Jackie.
Okay, so after that, I guess I also, while there's different things you can do in each entity, I think the next thing I would look at too is what you have from a real estate perspective and where you could be utilizing, any breaks around the real estate space. So what am I saying? Well, if you already own a rental property, the way that you're choosing to run that, does it make sense for it to be a long-term rental or a short-term rental? Or are you utilizing, if you own the building that your business operates out of, are you taking advantage of that correctly? Is there a change that needs to be made there? So I think evaluating how you're using your real estate is another one that I would have people look at.
I like it.
So I think a big mindset shift too is business owners are afraid of numbers. We're working our tails off, right? We're pouring our blood and sweat and tears. We're making sacrifices for this business. And I think there's a lot of fear of, I don't even want to look at the numbers because I'm going to see how much money I'm actually making. And I'm going to know that it's not worth it. Right. So I think getting a grasp of your bookkeeping and looking at your profit and loss is a huge step. It's great business advice, but also good tax advice.
Yeah.
And here's the thing is there's a whole bunch of people out there that hear that advice of, oh, I just need to look at my profit and loss. And they're going to say, well, I don't understand it, or it doesn't make any sense to me. So my point 2B, that was 2A, is look at your P&L. 2B is get what we call a tax therapist or an accounting therapist who will help you understand those numbers without judging you for being an idiot and a loser. And how could you let it get this bad? And I'm the accounting expert and you're just running a business better than I ever could, but you don't understand these numbers. We find that there's a lot of judgment in this industry. So we think it's really important to have somebody that says, hey, we get it. You're worried about keeping the lights on and making sure there's enough cash in the bank. Reviewing the historical P&L isn't such a priority, but it should become as a priority. And that's one of those ways that you can level up or mature as a business owner. So That's piece of advice number 2 is take a look at your financial reports.
Because most people tend to just go, well, I've got someone that does that.
Yep. And I'll worry about it in April when the taxes are due.
My brother did it. We're fine. Go ahead, Jackie. Give me number 3. You like that one, did you?
So,
Account.
so number 3, I think really where your taxable income or your AGI is going to sit really also has a big impact on what is available to you in terms of deductions, different credits, whatnot. So I think kind of having an idea of where that sits before the end of the year and what you can do to reduce it so that you get into the right thresholds is also a big thing as well. These are all things that just taking advantage of what you already have, but not even going and doing anything differently, right? Just assessing those different things before you even go into finding any additional strategies is big, right? So one example with the threshold thing that I can give is a lot of service businesses miss out on a deduction that is the qualified business income deduction, or QBID is or QBI. Both of those are used in the industry, and it becomes it's a 20% deduction off of your income of your business income, and it phases out for certain businesses like lawyers, like accountants. And so if you can make sure that you're within that threshold by maybe investing in other ways to reduce your taxes, then you also get that deduction. So there is different plays within the whole, all the rules, that it can be a domino effect. Once you lower it, your taxable income here, all these other things open up. So and if you don't do that evaluation, you could just miss it. You could just be over that threshold. So I think that's another thing, that before you go do anything else, how close are you to getting under some of these thresholds and into lower tax brackets too?
It's a small thing, make a huge difference.
Yeah.
All right.
Adam's number 3.
Adam.
So we talked about understanding your total tax bill, understanding how much money you make. We've now got present state, like we've stepped on the scale. Third part of this is get really clear about what it is that you actually want. How much money do you want to make? What work do you want to be doing in your business? What's the impact that you want to have with the business that you're running? Because now that we know where we are, if we can get clear on where we want to be, well then shoot, all we got to do is build a plan and then execute on that plan.
Yeah.
But we find a lot of business owners don't get really clear on what they want. So like the fun ones are like, I accidentally made $500,000 last year, and that's more than I ever wanted, and who knew? And then we got other people that say, I worked my tail off, I made $100,000, and that's not enough. Well, how much do you need? Well, I don't know. Well, at some point we need to have a plan or clarity for, like, not for some of us, it'll never be enough, but like, how much is enough to live the life that you want to be living? And I think a lot of people, we don't take the time to go through that. So that's why we try to start there with our clients. It's not an easy conversation, right?
Sure.
Like, how much money do you want to make, and what are the expenses, and what are the investments that you want to make, and the charity that you want to give to, and blah, blah, blah. A lot of people just haven't examined that. And we think that's really important. So whether you work with a tax strategist or not, are you sick and tired of waking up every single day, Monday through Friday, or even in Saturday and Sunday, and hustling and grinding away for a race that you haven't even decided what the finish line is, or what the destination or what the goal is? So I think that's my step 3. I don't think our answers could have been any more different.
They were wonderful though.
That was good.
I guess you guys have figured out you make a great team, but hopefully you guys figured that out.
How about this? If Jackie wasn't here, my answers would have been different. Is that fair? I would have said more of what she said, but I didn't want to duplicate.
You would have happy medium.
Add as much value as possible.
Yeah, I like that.
Really made it easier up.
That's great, but that's what's wonderful, that someone gets to come to you guys and have these sensibles and outside the box at the same time. I feel like my wife and I are similar. We work on different sides, but for someone coming to you guys, I mean that's just brilliant, because you're circling around the box and on the outside of the box, so that we can go, that's great, and that's exactly what you should do. But from this perspective, here's some extra things that you may not even be doing yet. Mm-hmm. And I think that's key to having just such a rounded perspective on what you guys are doing. Yeah. Before I let you go, do you find that a lot of the business stuff, and obviously working together in that realm, has affected your home life, and what do you guys do to keep those two working so wonderfully?
Well, I mean, I would say that we do talk a lot about work at home. So there are times when it's like, hey, we just aren't going to talk about work at this point in time. We have to have boundaries like that, right? But wonder is one of my working geniuses. So I feel like I'm always wondering, and it is nice to have that balance to bounce it off. But we also do, like Adam said, make sure that we make a lot of time for adventure, whether that includes work and play in one trip. We do like to travel a lot, and we do try to take time for both of those things in those spaces.
That's great.
Yeah, so it comes back to what do you want to be doing and how do you want to spend your time. So since it's August 6th as we record this, since the middle of June, we've spent 35 nights in our RV with our children traveling the country. We worked on that trip, but saw some really cool stuff that I've never been to the Grand Canyon. Check that off the list. Traveled Route 66. All right. Jackie and I also spent 5 days in Las Vegas together. We were out there for business, but because we understand tax strategy, we added a couple days onto the trip, and those were a write-off. So that was a really fun work trip. And then tomorrow night, Jackie and I are leaving for 5 or 6 nights by ourselves for our anniversary. And I feel like that to me, it maybe sounds like balance, but that to me is radical imbalance, meaning we're focused on this one thing right now at this moment. And that's us or the business or the kids or the family or whatever it is. And everything else is going to have to go away at this moment. I think that's imbalance. It's not that we're dealing with everything all at once. So I think that's how we do it is we're very clear, like, hey, this is the thing that we're doing right now. The business can wait, or maybe the kids have to wait, or maybe our relationship has to wait, or even like maybe just the time that Adam needs to be put on the back burner for a minute. And we'll get back to that later. So very intentional about that stuff.
I like that. Because I've coached entertainers and actors and people on camera for decades at this point. And one of the things I always focus on is like, look, whatever the stresses you've got going on, you cannot be creative if that is sitting on top. And similar, you can't have the family weight sitting on top while you're focused on the business side, because everything else just gets squished. And it's really great.
So while we were on our big RV trip, the president signed the One Big Beautiful Bill Act. And here we are, like, trying to drive the RV and travel Route 66 and see the sights. And it's like, okay, we've got 900 new pages of tax law to read. We got around to it eventually, but yeah, that's a really great example.
Yeah. Hopefully ChatGPT helped you guys out a little bit in the breakdown.
I don't trust that. It's not there yet. I love ChatGPT, but it's not there for this stuff yet.
For the right reasons. Yes. Yeah. Fair enough. Well, thank you guys both for coming to hang out with me today. What's the best place that everybody can reach out and get working with you?
So you can fill out a form on pennywise.tax, our website. And then you can also follow us on Instagram and Facebook as well at that same handle.
You can follow our business on Instagram, but it's way more fun following us personally on Facebook and Instagram. I got a public profile. I got nothing to hide.
Yeah, so do I. So at Instagram, I'm at Faith Fashion Finances.
Okay.
And I am Cars Coffee Capitalism.
Y'all are both fantastic. Thank you so much for hanging out. I had a great time. If you guys got value from this, like it, share it, drop a comment, all that good stuff. If you are trying to build a podcast, reach out to us, all that good stuff. And I will see y'all on the next one.
Thanks for joining us on this episode of Partnerships for Profit. We hope you've gained valuable insights on how to form profitable partnerships and take your business to the next level. Be sure to subscribe and leave us a review wherever you listen to podcasts so you never miss an episode. Got a partnership story to share or someone you'd like to see featured on the show? Reach out to us. Until next time, keep building those partnerships for profit.